An aggressive move impacting your money. The Federal Reserve announced the 5th consecutive interest rate hike this year.
The reasoning to help bring down rising inflation. Thank you for joining us tonight. I'm Carrie Sharp.
I'm Rory Johnston. Yeah, the Fed is increasing rates, which theoretically would decrease prices on everyday essentials. And we all know those essentials cost more. Electric bills are up almost 16% compared to a year ago. Housing, 6% higher. And grocery store trips cost at least 13% more. News Channel 5's Araceli Crescencio takes a closer look at what this could mean for your bottom line.
As we look ahead to the start of a new season, the hope is that cooler air settles in. And we're not just talking about sweater weather.
The main issue is that inflation has been higher than expected, right? I would say probably way higher than expected. And that is something we don't like. That's something that the Fed doesn't like. That's something that the government doesn't like.
The Federal Reserve wants to cool down the economy too.
I'm pretty sure most of you have experienced that when you go and do grocery shopping, right? Things are more expensive.
To fight inflation, the Fed has increased interest rates by another 0.75 percentage point. This matters because all eyes are on them.
That is one of the reference rates that all of the other rates in the market pay attention to. So if that rate goes up, all of the other rates are going to go up.
That means credit cards, car loans, and mortgages will be more expensive to pay off or to apply for. Experts say higher rates means businesses and people feel a bigger pinch in their pocketbooks and as a result, spend less.
If your interest rate is variable, your payments are going to go up. Now, if for example, mortgages are usually fixed rates, right? But if you are trying to get a new mortgage now, you're going to see that the rates are higher than they were a year ago or a couple of years ago.
And while the housing market might slow down, in Nashville, buying a house still won't come easy.
We live in a city that has experienced a very, very steep increase in home prices, right? So that means that if you are looking for a home right now, chances are that it's going to be pricey and your mortgage might not be as favorable.
While in the short run, higher rates means pain, experts are sure in the long run.
At the end, we should always expect to grow.
In Nashville, Araceli Crescencio, News Channel 5.